Alright guys, in today's video we are going to compare the Schwab US Large Cap Growth ETF, ticker symbol SCHG. I think this is definitely a good fund to invest in, so let's break it down. So let's look at the portfolio composition right here. Its prospectus states that it tries to track the Dow Jones US Large Cap Growth and the total stock market index. So let's get right into it. Within this portfolio there's 251 holdings. The top 10 of these 251 make up almost 55%. So you better make sure you like these top 10 companies if you're going to invest in this growth portfolio here. So look, Microsoft makes up 12.91%, Apple makes up 11.69%, Nvidia, which is on a tear right now in 2024, is up 6.59%, Amazon as well 6%, Google 3%, Meta 3%, the other subsidiary of Google, Broadcom, Tesla, and Eli. The other 45%, which is 241 companies, make up 45% of the portfolio. So all these companies are in North America, and they're all giant or large cap pretty much. If you're going to invest in this portfolio, you need to know that 46% of this sector exposure is within technology. So if you think technology is overbought right now, you are definitely very concentrated in this position. Communication services in second at 13% and healthcare 12%. Now, when you look at industry exposure, you're in software at 20%, technology 11%, semiconductors, which is huge, 11%, and then media and services 11%. So regarding distribution and expenses, we are getting a distribution yield of 0.45%. We should expect that to be low. We're looking for growth. We're not looking for dividends. Gross expense ratio is 0.04%. That is excellent. That is super low. So now continuing the Schwab US Large Growth ETF, we're looking at analyst ratings. We have 5 stars, 10-year rating 5 stars. Short-term sentiment is weak. I think that's because everything is so overbought right now, so there might be a little bit of a pullback. But midterm and long-term sentiment, very strong for support. This is what blew me away with this ETF. If you look at performance and risk, $10,000 invested in 2013 would be worth $40,000 right now. And when you look at the life of the fund, just look down here, life 15.5% returns. That is excellent. So this company is outperforming. Look at 1 year, 40% gains, 10% 3 years ago. As you can see with ticker symbol SCHG, ownership, we always want to look at that. Institutional ownership is 52%, while the other, which is most likely retail, is 47%. Other key statistics on it, just so everybody knows, it's an ETF. It's under Schwab Asset Management, and it started in 2009. And then it shows the fundamentals of it. Expense ratio is under SCHG right here compared to the average mean of other funds. So the net expense ratio is 0.04%. Your dividend is a little low at 0.33%, but it's a growth portfolio. They're trying to grow the company. We're not really looking for dividends here. So this is a good little snapshot if you want to take a picture of this. So now looking at the chart on a historical perspective, you can see from 2010 on the left side of the screen, starting at around $12 all the way up to $90 now. We'll just go over the last 1 year performance, going from $60 up to $90, just to give you some perspective. And let's just do the 5-year period. As you can see, 5 years ago we were at $40. So if you invested this 5 years ago, you have doubled your money, even more, which is excellent. So great returns. It has definitely been a great fund. If you're going to invest in this, you just need to think wisely about dollar cost averaging in and not trying to buy at the absolute high. So Fidelity offers good snapshots of SCHG. So I just want, in case you want to take a picture of it, you have SCHG, the top 10 holdings. It shows the 55% out of 251 total right here on the left side of the screen. Then moving to the right, it just goes over what we spoke about before with the Dow Jones and then the total growth, total market stock index that it's following. And it shows your top 3 holdings, which are Microsoft, Apple, and Nvidia. The top country is United States. Large cap 86% is what makes up this ETF. And remember, it's heavily focused on information technology. And with that low expense ratio, this is very competitive. I really like this fund. I definitely can see why people would choose this long term. And it shows how it's performing over the last 5 years, 10 years, and the whole life. So the life of the portfolio making 15% annualized returns. You don't get much better than that. That's just excellent returns on this fund overall. All right, guys, tell me what you think about that fund. I want to compare it against FSPGX. So if you want to see the differences, click on this video that I've made in the past. And if you're interested in the other playlists, you could check out anything where like 401ks, best dividend ETF, where to invest your hard-earned money, what is an ETF if you're brand new, and just overall just going over other ETFs that are technology focused like the NASDAQ Composite Index Fund. So definitely check these videos out, leave a comment, subscribe, and appreciate you.